ANJ Capital. Today's video will be about Saudi Arabia versus Russia oil price cut war. Ever since coronavirus, people have been using less oil because people have been traveling less. People have been driving less, definitely flying on planes less. Nobody wants to travel anymore. Italy's being quarantined. You can be arrested for being outside your house. Now gas is made from crude oil, and crude oil is made in these big areas, Saudi Arabia, Russia, Texas. These are big oil manufacturers. So as there's less demand for crude oil, means less demand for gasoline. Saudi Arabia's feeling it, Russia's feeling it, Texas is feeling it. All these big oil areas are feeling it. Saudi Arabia wanted to find a way around to save a little bit more money by cutting production costs. And they wanted Russia to join in with OPEC in cutting production costs. OPEC is Organization of Petroleum Exporting Countries. Russia declined, and Saudi Arabia responded by saying, okay, you don't want to join on? Let me just make our crude oil cheaper. They made their crude oil cheaper to its exporters, to United States, to Europe, to Asia. As their price of crude oil drops, that means everybody else's price has to drop as well, because they have to keep up. If Saudi Arabia has the cheapest oil and everybody still wants oil, they're going to go to Saudi Arabia and they're going to push Russia out the way. Now, when you push Russia out the way, there's obviously going to be conflict. So that's what people are worried about in the future, is that how bad it's going to get. But the good thing about oil price cut is it should trickle down to the customer like me and you, who buy gas for our cars. More of these companies, more of these oil companies would want to buy at a cheaper price, which means they'll have more in inventory and they want to get rid of it to make money. Just like the Walmart effect. They have a lot of cheap prices, which attracts a lot of customers, which is why their sales are so good. The markets are getting killed today. It's Monday. Never try to find the bottom. Just because you think, okay, this dropped this many points, it can't go any lower. It can't. The good thing about this drop is a lot of these stocks that were all at all-time highs have gone down like 25% since its all-time high. Be careful with trading. There's halting. Halting is when the markets freeze trading, where you can't buy or sell. Wait until everything cools off a little bit. And then if you want to buy, let's say you want to go long in oil, there's a thing called LEAPS, long-term expiration options, where you buy a year in advance, 2 years in advance. Let's say ExxonMobil will go to 45 by this time in the future. 45 would be your strike, and your expiration would be 2 years in the future. So my suggestion to anybody trading these markets is to cool down a little bit. You don't have to try to time the bottom. The thing about these sell-offs is you got to remember, you're not the only person in the market. There's retirement accounts, there's hedge funds, there's mutual funds. There's a lot of big money in the markets. If a market is selling off and people have a lot of money in retirement funds, what do you think they're going to do with that? They're going to say, oh, I'm not going to deal with this. I'm about to retire next month. Let me take my money out. More selling means more downward pressure, means stocks will continue to fall. You can buy stock. You can buy 100 shares, 200 shares, whatever you want to buy, and buy a put for every 100 shares you buy. It's called a married put, meaning that you want to go long with these shares, but you want to hedge in case it goes down still. Those puts would make you money as they go down, while the stock would make you money as it goes up. So ever since the sell-off, the Fed has been pumping more money into the markets. Repo market, repurchase agreement, where it pushes short-term liquidity into the market. So what happens is a firm sells securities to another firm, while that firm pays interest on those securities. They're very short-term, sometimes overnight, and the Federal Reserve added to that liquidity. More liquidity in the markets means they want the price of the stocks to go back up. They want to tame this sell-off. Some tickers to watch for oil for the upcoming months, because such a drop, these are the ones to look out for. Other than everything else that's dropped, you have USO, United States Oil Fund, you have ExxonMobil, Chevron, you have OXY, you have crude oil futures, you have XLE, it tracks energy, you have XOP that tracks oil and gas companies. So if this market keeps falling, we definitely could be in a recession. Whenever you invest in the stock market, you're paying these companies. You're investing in these companies. You're giving them money. They use that money for good. They're paying employees. They're paying the debt off. They're looking for research and development. they're using that money. And as that money goes away, problems arise. They might have to lay people off, have a hard time paying off their debt. So just be careful in markets like this. This could be the start of something real bad where, somebody might lose their job. So all these people who are enjoying the sell-off, okay, you're making money on your puts, you're shorting, you're making money, cool. People's retirement funds are getting hurt. People's life savings are getting hurt. Be careful. Look out for people around you. E&J Capital.